Let's start out with the most important news of the week, the jobs report. The crazy part about this jobs report is that the government's role in the jobs number was its lowest ever. Despite a lot of skepticism about Trump's plan for America First, tariffs, and reshoring, the plan is actually working. Here's what Scott Besson had to say about the plan on CNBC this morning.
Their numbers were more than 170,000, and government jobs were reduced by more than 40,000, more than 30,000 of that was federal jobs. We're at the lowest ratio of government jobs to total jobs since 1966. And this is part of President Trump's plan to reprivatize our economy. And I think, as I've said many times, 2025 is about setting the table. 2026 is going to be a banquet for the American people.
2026 is going to be an even better year than 2025 for the average American. Going back to your friends and telling them that you were wrong about Trump's plan all along is going to be more awkward than the conversation about who's going to be Big Spoon and Little Spoon in the doubles men's luge. But despite the crazy jobs report, the market is getting smacked like the United States by Norway and Italy in the Winter Olympics. On Thursday, $3.6 trillion of market cap was wiped out in 90 minutes. Gold was off 3.76%. The S&P 500 off 1%. The NASDAQ off almost 2%. Bitcoin down 5%. And silver said, you thought you were volatile, Bitcoin? Hold my beer. Silver prices fell 10% in nearly 30 minutes below $76 an ounce. The real estate giant CBRE plunged 12% on Thursday. The only two times where the stock has fallen more were during COVID and the Great Financial Crisis. It's actually off more than 30% over the last 2 trading days. For the first time in history, Walmart trades at a 45 times price to earnings ratio, while Amazon, the future tech giant, and one of the most profitable companies in the world, trades at just 21 times future earnings. Maybe that sugar high from COVID is wearing off. Speaking of sugar is at its lowest price since COVID. Over the last 8 sessions, 115 stocks in the S&P 500 are down more than 7%. Anytime that's happened, the market has had a drawdown of 34% or more on average. So what's really going on right now is late stage cycle behavior, where volatility comes back in. And dislocations in the market cause investors to make bad decisions. And it's because we're in a major regime shift. Listen to what Senator Marco Rubio has to say about America's role and questioning what's going on between the old world and the new world.
The world is changing very fast right in front of us. No. The old world is gone, frankly, the world I grew up in, and we live in a new era of geopolitics, and it's going to require all of us to sort of re-examine what that looks like and what our role is going to be.
The old world is gone, according to him. And when this happens, there's always a dislocation in markets. And every single time there's any sort of downturn or volatility in markets, the Bitcoin bears and the haters come out of the woodworks. Like Aunt Jemima Kelly, saying that Bitcoin's going to zero.
Where do you actually think its kind of value should be?
No, I do genuinely think its value is zero. I think there is no inherent value to it. I think that it has this pretend argument that it has scarcity, but in fact, although it's true that there are 21 million, there's going to be a total of 21 million Bitcoins, there is no limit to the number of copycat cryptocurrencies, many of which can do more than Bitcoin can. So you have to keep making this argument that Bitcoin is the only one. That's the people who kind of push Bitcoin as the only one, because it's the only way to claim that there is any scarcity. And basically what it's all based on is just belief. And it's very hard to gauge what that belief is worth, right? So I'm not going to claim that it's going to zero tomorrow, because it might be, because I'm basically would be betting on at what point people are going to stop to believe in it. And there are people who have a hugely vested interest in it, people like Michael Saylor, who you just mentioned.
Saying Bitcoin isn't valuable because other cryptos exist is like saying that gold has no value because I have gravel in my driveway. Like the Mona Lisa has no value because your daughter can do finger paint. Like the Super Bowl ring isn't valuable because you can buy a ring at Walmart. Speaking of the Super Bowl, these Sam Darnold t-shirts are out of hand, and I just ordered one. You get the point. Aunt Jemima Kelly is not the only one. I love that Sam Smith song. Ben McKenzie has come out the woodworks, probably one of Bitcoin's biggest bears. And he's back, and his takes are worse than ever.
You may have noticed that crypto's crashing again, like it did in 2022 and 2018 and 2013. You get the picture. But there's something different about this crash that you need to know about. Crypto has always gone through boom-bust cycles, but now, thanks to loosening regulations, people can buy financial products that give them exposure to Bitcoin and other cryptocurrencies through the regulated stock markets. They're called ETFs, and over $100 billion worth of crypto was bought by ETFs in the past 2 years, as the size of the market seemed to only go up. But in October of last year, after Bitcoin briefly reached an all-time high price of $125,000, investors began to take some risk off the table and sell their shares of these ETFs. The result? The price of Bitcoin and other cryptocurrencies has nosedived. As of the time of recording this video, Bitcoin is down nearly 50% in just 4 months. So what happens now? Well, we'll see how much actual money is backing these cryptocurrencies. When people sell their shares of the crypto ETFs, the Wall Street firms that issue them, like BlackRock, turn to the crypto exchanges like Coinbase to actually sell the Bitcoin. But if there aren't enough buyers, then the price starts plunging. What's the floor? Well, zero.
So he's saying that the market is saying that the ETFs are going to sell off Bitcoin and that it could go back down to zero. It's real value. But when you listen to what the ETF issuers are actually saying, BlackRock, the $13 trillion ETF manager, well, they're saying the exact opposite. Their holders aren't the ones selling.
The misperception out there that like it's a bunch of hedge funds in ETFs that are creating volatility and selling, that's not what we're seeing. If you look at IBIT last week, on a week that was tumultuous, obviously, in the Bitcoin market, we had 0.2% of the fund redeem, right? So if there actually were hedge funds that were massively unwinding trades that they were running in the ETF, you would have seen billions out. We saw many billions liquidated on these levered perp platforms. The ETFs have been very steady. It's a much more long-term buy and hold type investor base.
Coinbase, the corporate rug puller, who I don't trust, but you do have to give them credit. They've been in Bitcoin for as long as any company. And their CEO, Brian Armstrong, says he's more bullish than ever.
But Bitcoin remains the best performing asset class of the past decade. We've been through cycles like this many times at Coinbase, and adoption continues to grow, regulatory clarity is on the horizon, and I'm more bullish than ever.
In fact, they just announced that they bought $40 million worth of Bitcoin and they continue to buy every week. The major reasons that Bitcoiners buy the dip is because they're investing for tomorrow and not for today. They're not traders, they're long-term capital allocators.
In the past, Bitcoin, because it wasn't in ETFs, because it wasn't as broad-based, that there wasn't the kind of price discovery that's now available today, and maybe these prices are more realistic than what had been the case before.
Well, there's no doubt the asset is seasoning, and that's a good thing. We just had an all-time high, Andrew, 4 months ago, October 6th, I believe. So if you've got a time horizon of less than 4 years, you're not really a capital investor, you're a trader, and the traders are having a field day with the volatility, good for them. But the capital investors are looking out 4 years. And if you look at a 4-year time frame, Bitcoin is 2 to 3x the performance of the alternative capital assets. And anything built on Bitcoin over a 4-year or more time frame is going to outperform for the same reason.
But that's just from Michael Saylor, one of the biggest Bitcoin investors in the world. But what about someone like Gary Vee, the wine connoisseur, the social media influencer, the ad executive? He's buying Bitcoin because he's thinking about it 13 years from now at today's prices.
I walk in here right now as Bitcoin's crashing. I'm comfortable to say out loud, I'm buying Bitcoin left and right the last 48 hours because I'm cost averaging out. Yeah. Like, it was $1.25, it's 68,000. It could go down to 30,000. If I said here right now, y'all, you have to buy Bitcoin, and you guys aired this tomorrow, I'm sure you have a process, but if you did, and it goes from 68 to 42, people are gonna be mad at me, but I'm saying 68 buy now for 13 years from now.
And if you're like Gary Vee and you're thinking about Bitcoin for 13 years, well, you don't want to sell your Bitcoin. So work with the leader like Ledn so that you can unlock liquidity in your Bitcoin without selling your Bitcoin. Borrow against your Bitcoin. With rates starting at just 12.4%. There's no credit checks. Your money in your Bitcoin isn't rehypothecated. It actually sits in a cold storage wallet that you can look at right in the dashboard. They've never lost a single cent or sat of customer money. It's because they have responsible lending standards. They only let you borrow up to 50% loan to value. So if you want a $1,000 loan, you have to post $2,000 in Bitcoin collateral. They give you alerts, reminders to top up your Bitcoin. You can pay it off at any time. And the process is fast, simple, and transparent. Go to learn.ledn.io/simply to get started. One of the ways you can be sovereign in your Bitcoin journey is by running a Bitcoin node. But don't go at it alone. Get a coach from the team at the Bitcoin Way. They will walk you through step-by-step how to run your own node, become your own bank, and do so privately, safely, confidently, and securely, holding your own keys so that you're prepared for the future and whatever future that may be. Schedule a free 30-minute meeting with the team at thebitcoinway.com/simplybitcoin. Back to Gary Vee. I love his long-term mindset, and I didn't realize that he was such a Bitcoin proponent. In a recent conversation with Cam Newton, he said that if you gave him $100K, he's putting at least 10 to 15% in Bitcoin.
I got $100,000. Knowing what you know, where should I invest it?
That's a really timely question. First of all, it depends. Biggest issue, especially with youth culture, is I got 100,000 and I want $1 million tomorrow. And that's why people lose their money. What's up, my man? And so I would say that there's a couple ways to think about it. It's ironic that you asked me right this second at a time that Bitcoin is getting its face beat in.
Yeah.
Bitcoin's at 60-something thousand on an asset that I think is this generation's gold. So one of the places to divvy up a little of that 100,000, especially today, not 4 months ago, but today, a little 10, 15K into Bitcoin excites me.
Yeah.
So when markets reset and there's dislocations in the market, you have to understand that bad investors have their emotions go up and down and they make bad decisions. But the great investors, they don't ride their emotions or their motivations, they ride their discipline. This is a great clip from Ukrainian boxer Alexander Usyk, who talks about the difference between motivation and discipline.
Listen, bro, I don't have motivation. I have discipline. Motivation, it's temporary. Today, for example, today you have motivation. Tomorrow, wake up early, you don't have motivation. But when I wake up early morning training, I never have motivation. I have only discipline.
Buy the dip, don't have motivation, have discipline. Continue to execute whether it's an up market or a down market, because over the 4-year term and the long term, 13 years from now, like Gary Vee says, Bitcoin is going to be the asset that is going to be the new digital gold. So ignore what the haters are saying, like Aunt Jemima Kelly and Ben McKenzie. Focus on the future and focus on the long term. And one of the ways that you can do that is by buying Bitcoin through Bitcoin mining. Bitcoin mining sounds complicated. That is when you try to do everything yourself. Buying machines, finding power, doing the repairs. SaaS mining simplifies the whole process. You go on their website, you choose the Bitcoin mining machine that you want, and they do the rest. They run it, they manage it, they repair it, and sats flow directly to your wallet. Scan the QR code and book your free consultation today. Their advisors are standing by to answer your questions and help you to get started so that you can be disciplined in bear markets like this. This is Dante Cook with Bitcoin Simply. Happy stacking.